Hello, this is Richard C. Wilson at the Family Office Club doing an investor mandate interview today with my friend here, Steve. Welcome, Steve.
How are you? Good morning. Thanks for having me.
Sure. And Steve, I know you were at our Family Office Super Summit in December, our event at the Ritz-Carlton there with 800 or so people. And we got to know each other there as well as over dinner that evening. And can you just introduce yourself a little bit in terms of your day-to-day investment perspective, what types of investments and projects you work on, et cetera?
Sure. Well, my name is Steve. Thanks for introducing me. I've been an attorney for the last 30 years in investment and entrepreneur for that period of time as well. And I've developed, what I consider a formula for myself that's worked over the course of time that I like to share at times. And certainly we can, and we had dinner together, so you know some of my strategies and whatnot, but we could certainly cover some here. I look and we talked, Richard, before this call, even started here and in this conference, that, there's a lot of stuff that's going on in a negative way right now in our country, right, from a health perspective. On the other side of the fence, there might be a lot of opportunity for prosperity and success, potential growth in business, right? So I try and counsel and I'm coaching people and talking to them all the time. And I've been involved in investing for my whole career. I'm partners with Kevin Harrington, which you know as well, who spoke at that conference and event. And so we look at a variety of projects, and I've looked at a variety of projects over the course of my life and career. And I've always gone with my gut, right? And I think that's important to be really well researched and go with your gut when you really know what's right for yourself and not necessarily step out of the sphere of what your comfort level.
Sure.
Done it a couple times. I have to say I probably regretted it. And there's sometimes that there's something squarely in my warehouse. I represent a lot of people in the sports and entertainment space. And I had a gentleman come to me about 2012 about doing American football in a league inside of India. And I liked the idea so much that I didn't even have an agreement in place, but I basically said, boom, I'm in, right? And so I actually helped raise the funds for that and put monies up for, a lot of stuff that we did with that league. And so now we're still running and there's a lot of successful, high profile people involved in that.
Great, great. Okay. And what are you looking for in terms of the top 3 to 5 types of investments, types of companies, size of companies that you're looking to source?
Interesting. And I appreciate you asking that. You know what? I like all sizes of companies, and
Okay.
that might be a kind of maybe too broad of an approach for some people, but from our perspective, we look at it from the actual people who you're investing in, right? Because you're investing in people. So I have some people
Right.
that actually are very small and nurturing and starting up and doing startups and inventor types that are really gung-ho and excited about what they're actually, working on. And sometimes it gets a little more exciting to represent and myself in this sense, in this particular interview. I like working with people like that because I think they're looking for solutions, are very excited about their projects, and I like to see the vision of where it could go. And because
Right.
Kevin's background and my background and working with entrepreneurs and growing products ourselves, we think there's huge upside. I'd love more than anything to see a company going from doing, zero, to $100 million if I can. That would be my dream situation.
Right.
With that said, we have a lot of companies that come to us about structured relationships and investments and whatnot at a much bigger and grander scale, such as companies that may be involved in a pharmaceutical, perhaps even. I love the biotech space. I love pharmaceutical. I like the medical device space. I had like 3 calls yesterday in the medical device space because I've been an investor in those types of companies. I have success. I'm an investor in a company right now that has a medical device, which I absolutely love, that actually helps heal diabetic ulcers. So I think it's a wide scope, wide range. And it's just, I think we have a good feel for, good people.
Sure, sure. And what city are you based in, and what regions do you prefer to invest in? Is it all over the U.S. or U.S. Canada or?
I'm in Chicago, which I'm kind of the center and epicenter of things going on in this country, perhaps the world.
Right.
But, because again, my reach with Kevin and myself, and I just mentioned India a little while ago. I like the global relationships. Got a phone call with the group today in Germany, and been involved in stuff in Prague, and and so I'm in Israel, and I'm excited about working with people on a global basis because guess what? We're sitting here right now having a great communication on our computers because we're actually stuck where we are stuck here in a Zoom type meeting, and you know what? I could do meetings all over the globe right now. So we're actually a closer world right now to do business. Involved in another phenomenal deal in Chile with some great entrepreneurs, and they need some money and funding for a really cool biotech deal that I'm involved in.
Sure. We usually ask what's the number one opportunity, like above everything else. Do you want to source a consumer product company, a meat company, a FinTech company? Like what's the number one thing that if someone is listening?
Consumer product and FinTech might be my 1-2 punch. I
Okay.
really enjoy that. We love
Okay.
consumer goods products, and we develop consumer products, which I like as well too. And FinTech is just something close to my soul. I just really enjoy it a lot. A close third might be biotech, which I mentioned earlier, because I love the opportunity to see something that can potentially heal somebody of some issues, right? And
Sure.
that's always cool to be involved in something like that.
Sure. Okay. And then what is your number one piece of advice for an investor listening to this interview that would, if you knew it 10 years ago, it would have saved you maybe $100,000 or just saved you a ton of time? It's hard to put a number on.
2 words: don't chase. I think there's a lot of times people feel they have to be active, and by being active, they interpret that to be overactive, and that turns into real chasing. And when you're chasing, you're not really working with your head. You're not really thinking clearly and straight enough to really absorb the ramifications of a good or bad investment.
Right.
A lot of people, we've all been victims of this. You get that great call from somebody going, we invented something new. The stock's going today. Jump on board. It's going to be gone tomorrow. Rush, let's go.
Right.
There's so many opportunities out there. Take your time. Family offices in particular have to be protective of what? The family wealth. Right.
Right.
So I think don't rush and don't feel like you're panicked and pressed into action. I like taking like a 24-hour, cool down rule, which is basically no matter how hot and cool I am over something like that, let me look at it in 24 hours. I have to tell you, probably 70% of the time after I look at something for 24 hours, it's completely different than what I thought it was 24 hours earlier.
Right. Yeah, no, that's a great point. We did an investor interview right before this with someone as part of a investor club, and they said it was that group mentality coming at it a few times over is what evolves their idea, just similar to coming back to it with your own head or your own team a day later. And I know last week someone approached me and they said, hey, we got this great deal, but we need $50 million in 5 days. And I said, well, I'm not even going to read the email because it's going to take me 5 days just to read the email, think over if I even know one person that'd be interested. And that's such a huge size deal to try to get done in that time. I was like, well, I'm not your guy then, right?
Right. And then that gets back to my final point with everything, and that I would close with in my conclusion to everything. And I guess this is my legal background as well, too, because, I structure a lot of deals, and that's what I'm really known for as well. And I'm responsible and work with a lot of celebrities, right, in sports. And that, to me, is due diligence. I can't stress that enough. That's where people lose more money than anything. What happens is you wake up one day and go, I had no idea that guy had a bankruptcy, right? I didn't know that they lost their money on this particular deal, which is almost very similar or exact to this deal in a different rose-colored, glass scenario, right?
Yeah.
So I think that due diligence to me is most important. And you know what? Listen, every single deal, and I consult and with a lot of people with you and whatnot, but read the agreements. Yeah. I can't tell how many times I have people call me up in my whole career, right? And I speak about this topic all the time. Read the agreement. Right. People are like, there's a boilerplate. Boilerplate means one thing. Someone's boiling you, right? So it's kind of like, what's boilerplate? Really, there's language in there sometimes where people call me up and they're shaking their heads going, I just didn't know it was in there.
Yeah.
They were over exuberant. They're emotional. They were excited. And they didn't take the time to say, I didn't see that's how they could get out. I didn't know there was repurchase a portion of the agreement. Like I've seen so many people that have come up, and this could be another time you guys can get together and talk about this on the network. And thank you for having me on, Richard, by the way. Sure. What you do is terrific. Your service is terrific, and you're a valued partner. Okay.
Thank you.
But I can't stress enough that sometimes, people look at it and say, this company's so successful right now, and there's a repurchase agreement in there, right? A clause, it's repurchasing all my stock. I didn't know it was in there.
Right.
I didn't even understand what it was. Just do the due diligence. You put money in. That's the most important thing.
Yeah. That's a simple thing to do. If it's an agreement of any type, you should read it. How simple of a thing to have to say, but you have to say it because so commonly that happens, right? So it's one of those interesting things.
People call me up and they'll say to me, and I'll work with high-level celebrities sometimes. They're like, well, if you like it, I'm good. I'm like, you know what? No. I said, we're going to go over every word of this agreement and talk it through, and let's really go through it. And by and large, most of the time I hear comments coming back, right?
Yeah.
Because a contract's two-way street. So, that would be my most profound conclusionary advice would be.
Yeah, no, that's great. Especially for those that are worth maybe 25 or 50 million net worth and are moving 100 miles per hour. Is that much more tempting just to outsource everything that's not what you enjoy doing or what you're best at? So
yeah, I had a client, and I'll leave it to this story because it might be profoundly important for people to kind of think about. I had a client was doing tremendous, a very high profile person who played in one of the major sports leagues, and was worth several $100 million. Okay. Had a couple, probably 2, 3, or 4 different exits. and decided in 2007 to purchase a parcel of land, okay, to do tract housing. They required him to have a personal guarantee on the tract housing. What happened in 2008? His fortune was lost. You know, he had enough leverage and power to get this loan probably without that personal guarantee. So I just let that story out there sometimes because it gets the same response you're giving, you know, right? That thought process, how many times you're put in that situation. You might have the best business in the whole world. Understand the ramifications of signing a personal guarantee.
Right. Even though it's labeled with a relatively obvious name, there's many ways not to do it or get around it or just not do that.
You can't tell what happens. We're sitting with the coronavirus right now, right? I mean, if he signed it again this time, he signed that contract in 2008. If he signed it today, guess what? There's no row housing getting built for the next 6 months. And quite frankly, when we come out of this, I'm not so sure what the real estate market looks like because I think people are going to become a little bit more conservative.
I think a lot more conservative in some cases. There'll be a segment of people, even if they escape this while only being bloodied a little bit, I think they'll be in the back of their mind, who knows what could happen, right? Learning
experience. We all could learn. Nobody could have predicted this.
Yeah,
so, but with that comes prosperity, right? And so some of the best companies got funded in the last 2008 to 2010 crisis, and you may not be aware of it, but somebody actually texted to me. It was great. There was 4 or 5 companies that got, like Airbnb and some other big ones that actually launched during those times. So I think that this gives you time now to reflect about what you'd like to do, what you'd like to search forward with, change your methodologies, change your analysis, change your mission statement, right? I think that there's a lot of great things now because guess what? Now we come out of this right now, everyone's going to be burgeoning. Everyone's going to be surging forward for that next great opportunity to really grow. And I think people are going to be way more collaborative and looking to do bigger and better deals. So I look at the positive side of what we're going through.
Yeah, for sure. So I appreciate that. And what's the best way for someone to get in touch with you? Is it through LinkedIn or email or?
Steve at me.com. They could directly email me, no problem. They can reach out to me on LinkedIn, which is terrific too. And quite frankly, I'll be available. And Richard, you know me personally as well too, so anybody can reach to you as well too. And again, thanks for being a guiding force with your business from all these years. And I see the trust that people have in you, and looking forward to our continued and successful relationship.
Yeah, for sure. We're happy to have you on one of our virtual investor discussion panels we're doing each week. And then once our live events start up in couple months, whenever the CDC gives us a thumbs up, then we hope to see one of those again too.
Looking forward to it. Thanks so much.
Right.
Stay safe. Bye-bye now.
You too.
Take care.
Bye.